So let's welcome everyone to today's edition of Frontier Open Bell Tuesday, the 8th of September. Joshua DBC, banking analyst at Betiva Capital Management. Joshua, good morning. It's good to see you.
Good morning, Boston. Good to see you too.
Thank you, Joshua. We'll run through a couple of things today. Nigeria's story is quite a very big one, quite a lot of stories coming through on the economic side, on the market side, and I'm sure Betiva has its eyes on some of these. But let's just give everyone a sense of how the stock markets finished up across the continent on Monday. The Nigerian market something less than 0.1%. The Ivorian market was down much bigger, 0.39%. Egypt came back into positive territory, 0.57% on Monday. Kenya booked 1.21% massively down south. Again, pressure on the currency and on the stock, on the equities market. In South Africa's GSE, 1% in the green, a bit of a comeback, but the currency was under pressure as we're expecting at about 11:30 Nigerian time, South Africa's second quarter GDP. So let's look at the East African markets quickly. A bit of a pressure on the stock market on Monday to start the new week, but the announcement from the Central Depository says that the authority is paying the final payout to bond investors, the infrastructure bond investors. They're getting their final pay. It's called M-Akiba 2. That infrastructure bond was put together to grab infrastructure funds together from investors for critical development of the Kenya economy. Meantime, the retailer Dickens in Kenya says it's going to liquidate the firm after the failure with its financials. And Rwanda yesterday released its first half 2020 monetary policy and financial stability report, stating that the economy will grow more sluggish grew sluggish in the first half of the year because of the pandemic and the slowdown in agriculture. Uganda has appointed 7 commercial banks, ABSA, Standard Chartered, and a few others, as primary dealers in the securities market. Effective 1st of October, these 7 banks will now be dealing or providing liquidity in the Uganda's central bank securities markets. The central bank yesterday in Dar es Salaam complained about the level of liquidity in the securities markets. That's about 41%, meaning the balance is untraded and being held marked to maturity, and that the Uganda central bank wants that to change. Ethiopia will be selling 5% of the government's stake in Ethio Telecom to the citizens. That's very interesting development. I'm sure, Joshua.
What?
Yes, Joshua. I was talking about Ethiopia planning to privatize the country's national
telecoms. Yes. No, so
yes, I mean, Ethiopia.
Well, I mean, it's a good development, but if we know anything about history and about how that's played out when Nigeria attempted to privatize Nitel, then we know that these things don't usually play out the way they are
planned.
They are planned exactly. So sure, but the 5% stake depends on how they're going to do it. I believe that it would be much simpler to do it the same way the Nigerians did it, to sort of just open up the market and allow foreign investors to come in. I think that would, especially with the way the telecommunications industry has sort of evolved over the years. If they enter into that market, your Airtel and your MTNs and the likes, I think that they'll be able to provide a more democratized infrastructure and cheaper prices, rather than giving people a 5% stake in the local monopoly, really, because I doubt the monopoly is very efficient, and I doubt that the prices are fair for all the citizens of Ethiopia. So I think that what they should really do is just invite foreign investors to come in and set up shop and even participate in this sale, so to speak.
So just liberalize the market, as it were.
Exactly. Liberalizing the market is far better than selling. In fact, from the way it was, we held on to Nitel as a concept for far longer than we should have. I think,
Mm,
in the end, Nitel died a natural death
mm,
once, all the other players in the market were able to offer a far superior service for far cheaper, with a more efficient structure. So I think that's what they should do here is open up the market completely and allow their monopoly, or they allow their state-owned enterprise to die a natural death, as harsh
mm.
as that may sound. But it's better
Oh,
than selling a 5% stake that won't really do anything when it comes to raising money for, any kind of infrastructure that they may require,
mm.
or, in attempting to fix a problem that might be bigger than a 5% stake will really fix, I think.
Yes, because if we sell 5% to ordinary folks who don't really have the muscle,
Exactly.
um, who don't really have the financial muscle, as it were. Uh, so again, what are you trying to do? I think we've been able to do it in Nigeria. Anyone who wants to invest in the shares of MTN or Airtel can just do so, and maybe very soon in the near future we can persuade others like Globacom to come in. So let's talk about Uganda Central Bank appointing some dealers to provide liquidity into the their domestic securities market. That's also a good move, by the way.
Well, okay. So primary dealers for the next 3 years, 7 banks. It's pretty good. I think obviously raising capital from the local market is obviously a good way to go, especially if your currency is fairly stable. It would probably encourage investors to borrow money to Uganda. However, I'm not entirely well versed on Uganda's economic, let's say, strength at the moment. So, there's always the level of risk with all these smaller developing countries where you sort of have to wonder, where they are economically and whether or not it would be a riskier investment than coming to a Nigeria or going to a Kenya, for example. But at the same time, when you have, your 7 banks, if they are not just acting as primary dealers but as underwriters, then they can bear some of that risk and ensure that Uganda raises the amount of money that they require. Now, I'm also very curious to know what exactly they need their money for. Is it for infrastructure? Is it, to sort of put them on a bigger stage globally or on the African continent? It's always very interesting to know why all these countries are raising capital. We know why Nigeria needs to raise capital, not just because we're not generating enough internally, but because of the fact that it's very important to, shore up our infrastructure. However, I think that we've noticed, or we have realized that, PPPs, or public-private partnerships, are more effective and also a cheaper way for the government to, conduct infrastructural upgrades and things like that. So, in order to fully understand, the benefits to Uganda and the value being created, we need to understand what this money is going to go towards.
Mhm.
Because you don't want them to sink it into things that are long-term projects that will not generate any kind of value in the short term to repay that debt that they're generating. It's always very interesting to note.
Okay, just dip on liquidity at the marketplace and try to see how things go. But like you rightly said, if you get in the banks, they help you get the money, and what do you use them for? It's always a big question mark in a number of African economies, by the way, in terms of how we structure our development, how we move our risk fund from here, deploy it at the other end. You don't get to see the result as quickly as you want, or as well as you initially planned when you were doing the capital raising. Let's talk about the Nigerian space a little bit. Um, Again, with oil prices now down, Nigeria is looking at not a very pleasant situation. Brent is now a little bit lower. U.S. oil is below 40 slightly. But again, the shares of USC's AM&P services, about 55.1 million shares of USC of Nigeria. I think that's part of the divestments still going on between USCN and UPDC. The government new supports government spent about $30.5 billion between April and July in the fight against COVID-19. Nigeria is getting some measure of commendation for how the pandemic had been handled so far. Now that we're reopening international flights, commercial international flights into the country, everyone's still on guard as it were. Ghana, the authorities in Accra is set to issue 22.7 billion shillings in treasury bills over the next few months. And of course, President Nana Akufo-Addo is the new chairman of ECOWAS. So yesterday, the reaction of the investors to the bank's earnings was expected, isn't it?
Well, yeah, like I mentioned before, we expected to see a little bit of profit taking, because obviously after the results were released last week, one by one, we saw a lot of buy-ins, we saw a lot of capital appreciation, and so people took advantage of that to sell down and take their profits. So that was not completely a surprise, and it is not a change in sentiment. It doesn't indicate that investor sentiment have somehow dampened. I think going forward, we'll still see a little bit of that. We'll still see, some gains across the board, and then some sell downs as people take profits. But, like I keep saying, the banks have done a lot better than expected. And so going forward, I think investors, maybe not the international investors, but the local ones at least, should take some sort of comfort from the fact that they came through the worst of the pandemic shutdown with such great results. I mean, of course, they were helped a lot by the CBN devaluing the currency twice in the space of 6 months. So that really helped these banks. But if they hadn't been well prepared for that situation, it could have gone in the complete opposite direction, and they could have been recording provisions in the tens of billions. So I think we have to doff our hats to the banks for learning from the mistakes of 2016 and moving forward, in a positive, proactive way. I think that's the most important thing.
One big news that we're expecting in a short while this morning before lunchtime in South Africa's GDP. So if we look at the Southern African markets, Bloomberg this morning was forecasting 39.1%, not far from the initial 40.1% pullback or contraction. That would bring South Africa to 4 quarters of economic contraction back to back. South Africa's net FX reserves $50.5 billion in August. Consumer index is rising, but still below 27-year low. The rand is still weaker against the Q2 economic report. Botswana Diamonds raising £300 via issuance of new shares. And of course, African Bank, very small commercial bank, has gotten additional money, about 8 billion rand, to support its relaunching into wholesale lending markets. Joshua, so what's your outlook on South Africa's GDP?
Well, the thing is, it's quite interesting. Obviously, the truth is that South Africa had been in a bit of a bind even before the pandemic. All the way since last year, the economy had been entering recession, and it's quite interesting to note that such a large country, it's perceived as a more developed nation, and yet for whatever reason, I think maybe through some policy mismanagement or economic, mismanagement, they've really not been able to harness their human capital, because they have a very young population, but unemployment is very high, and they still have, a lot of political issues, let's say. So I think overall, this is just the perfect storm in terms of, how the pandemic came and just worsened everything. You see, Nigeria, we are in a bit of a bind, but we will recover. By the end of this year, I do expect the economy to go back into a growth phase. But for South Africa, unfortunately, I think that this is just deepening an already, pretty bad open wound. And I think, unfortunately, there's not too many ways that you can look at it that you see them recovering too quickly. So I think the worst part, or the most interesting part for me, is that how long it will take for the economic, for the South African economy to recover from not just this, but what was happening before this, how they will sort of get back to a state of, empowering their population and sort of fixing their problems, because this is a whole scale issue. This is not something that you will just do through a few community projects. This is a large scale problem that they haven't even begun to address, in my opinion. And I fear that this could last for a pretty long time if some significant changes are not made policy wise specifically. And I don't know if the current government is the right one to make those changes, unfortunately.
Interesting point you raised there. If we see a fourth quarter contraction, that takes us well into 2019, by the way. So South African economy had actually been tottering even before the pandemic. So it's not just fixing the pandemic period, but fixing it way back beyond even the pandemic of COVID-19 itself. And that's a very valid point to raise there that some folks tend to ignore, that South Africa's economic problems seem to it's beyond the history of pandemic in 2020. And that means a whole lot of work needs to be done going backwards to be able to move forward beyond where they were coming from. I think that's a very valid point. We'll take that on board. Very interesting point. North Africa, to just take a final look at the final region for the show. As always, finish up with the North Africa, where the European Investment Bank signs new 800 million euros financing to support Egypt's private sector. It looks like all the money is heading towards Egypt, by the way. The FX reserve went up to $38.38 billion in August. That's about the same figure for Nigerian FX reserves, by the way. A very ambitious plan by Egypt to sell electricity to Africa and Europe, according to Bloomberg. And economic data for Morocco, industrial production up 67% in July. That's quite massive, considering the lockdown. And of course, it looks like they came back very strongly as soon as they reopened. Everybody get back to work. Isn't it, Josh?
Yeah, so I think we have to commend Egypt for the way they've handled the economy, the way they've handled the pandemic. The decision they made for their currency specifically, was what I think set them on this path, because as soon as they recognized that they needed to bite the bullet and, free up their currency to the open market, they really, avoided all of the issues that we and a lot of other sub-Saharan African countries are having. So I think going forward, this is just a benefit of that earlier decision, because what it means is that a lot of finance, like you said, is flowing into Egypt, because they know it's a free and open market. Investors can get their money in and get their money out as they like. And then on top of that, they are generating enough electricity that they want to sell to Africa and to Europe. I mean, that just tells you that their infrastructure is on a different level from the rest of us, because I don't know how many other North African countries or even African countries can say that in general. Although, Morocco's industrial production is up 67%, which is good. I mean, that just tells you that the North Africans, I guess sometimes they don't even like to see themselves as completely African. So I guess they're separating themselves from us by being better managed and, showing us the way forward, really. That's it.
I think somehow you it's a show me your friends, and I'll tell a lot more about you. If you look at Tunisia, if you look at Morocco and Egypt, and you look at their closeness to Spain, to Italy, to Turkey, to Greece, it looks like the kind of neighbors they had up north outside the continent of the Mediterranean. Turkey, Italy, Spain, the rest, France, and all the way to Netherlands, shows that they try to leverage that, and with inflows of tourists across the Mediterranean, exploring the Sahara Desert and what have you, historically speaking, hundreds and hundreds of years ago. I think they just use that to build an economy that is a lot more sustainable, that is a whole lot better, that is a whole lot more industrialized than the rest of us down the sub-Saharan. So it looks like us between there and in sub-Saharan Africa, with the British and the French down here, we don't see the same traction in terms of copying those kind of economic models, the kind of political stability. Apart from a little political instability in a few countries like Libya and Algeria, The rest of North Africa seem to have done very well by their close relationship with the Europeans over the centuries, and I think that's something we should give them kudos for being able to manage that. Look at Morocco's industrial production, for example. Look at without the Muammar Gaddafi's toppled a couple of years ago, Libya has the highest GDP per capita on the continent. In fact, some people said it's cheaper to buy a gallon of petrol in Libya than a bottle of water to drink. That water is more expensive than petrol under Muammar Gaddafi. So because the way it was managed, the oil industry was one of the major oil producers within the OPEC, a country to be reckoned with. So and I think maybe they'll be able to get a few of this back. Thank you so much, Joshua. Odebisi from Betiba Capital Management. Thank you so much for being our guest today on Frontier Opening Door. Thank you so much. Have a great day and see you next time.